Financial analytics and control, and in this video we are going to discuss on the concepts under unit 3. Unit 3, it basically discusses on cost measurement concepts. So we are going to study about various types of cost, the meaning of cost, and the various methods of costing that an organization can adopt, and let's move on to the topics. So the first topic is the meaning of the word cost and its types. So what is cost? Cost refers to the amount of expenses that is spent for production in a manufacturing concern. So when we talk about cost is nothing but it is the expense. It is the amount of expense or amount of money which is spent for production of a goods or a services. So cost could be generally categorized into two types. One is direct cost and the other one is indirect cost. Direct cost, it includes the raw material cost and the labor cost. And indirect cost, it is also called as overheads. It includes all the factory expenses, administrative expenses, office expenses incurred by the organization. So this is the meaning of the word cost. So cost is nothing but it is any expenses that is incurred by an organization during a given period of time for production of a particular goods or a service. So as I told you, cost is nothing but material cost, labor cost and overhead cost that are incurred in production of a goods and services put together will give us total cost incurred for production. So material, here material I mean the raw material that have been used for production. Labor, it's the people who are involved in the production process. The wages that is given to the laborers, it forms the main part of the cost incurred for production. And overheads are also called as indirect cost, and it includes factory expenses and administrative expenses or office expenses that is incurred for production. So cost is nothing but the expenses which is incurred by an organization to convert the raw material into finished products. It is incurred for production process. So what is cost behavior? So cost behavior is the changes in the expenses with changes in business activity. So cost behavior is a concept that you will have to know. So we know cost is an expense that is incurred for production. Cost behavior tells you the changes that takes place in expenses incurred with change in business activity. So based on cost behavior, there are three types of cost: variable cost, fixed cost and mixed cost. Variable cost are costs wherein there would be equal change in expense with the change in the business activity. Fixed cost or such cost where there will not be any change in the expenses but the changes in business activity. And mixed cost, it's like there would be partially change in expenses with change in business activity and partially it would be fixed. So mixed cost are semi-variable cost, and it has the characteristic of both variable cost and fixed cost. So variable cost are such costs which changes with change in business activity. Say for example is material cost. If I'm gonna change the production number, okay, so if I'm gonna have change in the production volume or production quantity, the material cost also changes with the production. Yeah, so material cost is an example for variable cost. Variable cost, there would be changes in cost with change in business activity. Fixed cost is wherein there will not be any change in the expense with changing business activity. Example, rent insurance. So rent of a building or the insurance premium amount that I make every month or every year will remain the same irrespective of the business activity that I carry on. So hence fixed cost is fixed. It will not change. Variable cost, it changes with changing business activity. Mixed cost, it is also called a semi-variable cost, and these costs, they have the characteristic of they are partially variable and they are partially fixed. So example is internet fees. To some extent, the internet payment amount would be the same, but after a particular limit, there would be changes in the tariff. right? So that's how it is. So this is with regarding to the meaning of cost that we will have to know. So cost is nothing but it is an expense that is incurred for production process. It is an expense it is an amount that is spent for producing goods or services in an organization. And there are two types of cost. One is direct and the other one is indirect. Direct cost includes material and labor, while indirect cost, it is also called as overheads. It includes factory expenses, administrative expenses or office expenses, etc. Okay, so having understood the cost concept, let me just explain you an example. So throughout this session, we are going to take up the same example in order to understand the subsequent concepts. So just imagine a factory, a paper making factory. So what happens in the factory, how a paper is being produced? So the very production starts with the timber. The timber is debarked and it is run into a chipping machine, and the next process would be a mechanical pulping process. Then it goes into chemical pulping process, then an hydra pulper process is being done, refining, screening, cleaning, and finally we have the paper making machine, and we have got the final finished product, which is piles of paper. Okay, so this is how a raw material timber is being used to make a finished product, paper. So this is how a paper is made, in a paper factory. So the raw material, what I call it, the raw material is the timber. It is used, okay, in the whole process to make the paper. And it is not just the raw material cost alone. So this the cost of this timber, we call it material cost. Okay, and this is one of the direct cost. And the other direct cost, what we call it, the people involved in making the whole process successful. So the wages that is given to the people, the wages that is given to the labor, it forms the labor cost. It is one of the direct cost. Okay, so the labor, they handle the material, and they are the real, apart from the machines that works on converting the raw material into finished products, the contribution of people is also very necessary. So apart from material cost, which is the timber, we have the labor cost, which is involved as direct cost in converting the raw material into finished product, that is paper in our example. And we call something called as overheads or indirect cost. So what are overheads or indirect costs? So any tax amount that you make, any stationery, the rent that you pay, okay, the insurance amount that you pay for the machineries, all such expenses, all the office expenses, administrative expenses, the transportation charges, okay, all these come under the power that you utilize, the electricity charges, the lighting charges, everything comes under overheads. So apart from the material cost, apart from the labor cost, all other costs are called as overheads. So this is how you will have to imagine a factory and how a raw material is being converted into finished goods in a factory, and how the direct cost and indirect costs are involved. So hope you have understood this example. So we have taken an example of a paper production industry wherein they use timber as raw material and they follow various processes to make paper, and the direct cost or material cost and labor cost, and the indirect cost or overheads. Okay, so indirect costs are nothing but the transportation charges, the electric charges, the power that is used, the rent paid, or any insurance amount that is paid, everything comes under overheads. Okay, so this is cost for you. Okay, so all the cost, the total sum amount of all the expenses that is involved in converting the raw material into finished goods, the total amount that is spent to produce the goods and services in a given period of time, it is represented as cost. So moving on to the next concept, which is methods of costing. So how cost could be calculated? What could be the ideal method for an organization to calculate or to determine cost in an organization? So there are various methods. We are going to see one by one. The first method is absorption costing. Absorption costing, it is also called as full costing, and this costing method has been approved by the GAAP, which is generally accepted accounting principle, which is an financial reporting a standard. So it's been approved. Okay, so this absorption costing method is required for you, or it's been adopted for external reporting purpose. So how cost is determined under this method? We take into account direct material, we take into account direct labor, and we take into account overheads, both fixed and variable overhead. The sum total of all these amounts will give us full costing, or will give us the total cost of the goods or services produced, and this is called as absorption costing or full costing. So this is with regard to the first method of costing, which is absorption costing. It is also called as full costing, and it is approved by GAAP, and it is generally used for external reporting purpose. Under this method, we take into account direct material, direct labor, variable overheads and fixed overheads. All the four put together, we will get the total cost of the product, and this is how the cost of the product is determined under absorption costing. Moving on to the next method, which is a total contrast of the other method. So absorption method is a contrast method to variable costing. The second method is called as variable costing, and this method is not approved for external reporting, but it is used generally for internal decision making purpose. So under this method, what happens? We take into account only direct material, direct labor, and we take into only overheads, which is variable. We ignore the fixed overheads under this method, and hence this method is not used for external reporting purpose. It is used only for internal decision making purpose. So the first method that we saw was absorption costing or full costing, wherein we took direct material, direct labor, variable overhead and fixed overhead, everything for consideration for determining the total cost. While under variable costing, we took into account only direct material, direct labor and variable overhead. We ignored the fixed overheads, and hence this method is not used for external reporting purpose. Moving on to the other three methods of costing, which is actual costing, standard costing and normal costing. What is actual costing? Under this method, we use the actual cost of material, actual cost of labor and actual overheads incurred during the period of time to calculate the total cost of the product produced. Okay, so under actual costing method, we will record only the amount that was paid. Okay, so we take into account all the actual amounts. So once it is incurred, we take the material cost, we take the labor cost and we take the overhead cost. We total it up to determine the total cost of the product. That's actual costing method. We have another method which is called as standard costing. Under standard costing, we take into account, rather than taking the actual amount paid, we take something called as a standard or a predetermined cost. Under standard cost, we take into account a predetermined cost based on historical data. Why we actually use standard costing is for understanding the variance. Okay, so standard cost is nothing but it is an expected cost. We expect a material cost could be 10,000. So the expected cost is taken into account rather than the actual cost under this method. So we do this in order to find out whether there is a variance in what have we expected and what is actually incurred. So this difference, we record it as variance. So that in order to calculate the variance and in order to analyze why there is a variance, we use the standard costing method. Under standard costing method, we, rather than using the actual cost of the product, we use something, a predetermined cost or an expected cost of a product, in order to find out the variance. So that's standard costing for you. And we have one more costing which is called as normal costing. Under normal costing, what happens is we take into account actual cost of material, actual cost of labor, but we will, for overhead charges, we take the expected overhead cost, or we take standard overhead cost. So these are the three other methods of costing. So the first two methods were absorption and variable costing, and the three other methods that we saw were actual versus standard versus normal costing. So let's move on to the other costing. The sixth costing method is activity based costing. So it's in short called as ABC, activity based costing. So it is one more way of ascertaining the total cost of the product, and here it actually uses a different concept. It uses concepts like cost pool, cost center, or cost drivers. So what is done here, under activity based costing, first we identify all the activities that is done, that is associated with the manufacturing of a product. Okay, say for example, we had an example of a paper manufacturing company, and it gone through various activities, right? From debarking the timber, and you have the chemical process of pulping, and it gone through various other process. So all these activities are identified, and a cost driver or the cost center is allocated to each of this, and then the cost assigned is calculated. Okay, so this is activity based costing. So activity based costing is wherein we are going to identify the various activities that is involved in producing or manufacturing a product, and then we will assign cost to each and every activity. Okay, and we also make sure that we calculate the cost center and cost driver to each of the activities. So this is mainly to track the cost of each and every activities of a manufacturing concern. So this is activity based costing. And the next one is life cycle costing. So the very name tells you the life cycle of a product. Okay, so a life cycle of a product includes acquisition cost, operational cost, and disposal cost. Okay, right from planning the product, to designing, to acquiring the material, to maintaining the product. So each and every step or each and every stage of the life cycle of a product, the cost being determined. So this is called as life cycle costing. Okay, from the date of acquiring the raw material till the date of disposal of the finished goods. If you're gonna determine the cost of the product, then it is called as life cycle costing. Okay, so from planning till actually disposing the product, if you're gonna find out the cost involved in each and every stage of manufacturing the product, it is called as life cycle costing. It is also called as whole life costing. So what are the costs? Three main costs that is involved in life cycle costing method are acquisition cost, operational cost, and disposal cost. Acquisition cost, it actually refers to the raw materials, that raw materials or people or time that is involved in acquiring all the resources necessary for producing a product. Operational cost, it refers to the all the operational activities in order to convert the raw material into finished goods. And disposal cost, it refers to the finished goods is like now done. So now you're going to market the same and you're going to sell it to the final consumers. So wherein it has to go through various intermediaries. So the transportation, the warehouse, and every such thing from finished goods till it is sold to the final consumer, it is referred as disposal cost. So this is life cycle costing for you. So far we have seen various costing methods. A quick recap till now. So we just saw absorption costing, which is nothing but full costing method, and it's been approved by GAAP, and it is used for external reporting purpose. And we take into account direct material, direct labor, and fixed and variable overheads to determine the total amount of cost. Variable costing is total contrast of absorption costing, and it is not used for external reporting. It is not approved by GAAP, but it is generally used only for internal purpose for decision making, and we exclude fixed overheads alone while calculating the variable costing. And then we saw something called as actual, standard and normal costing methods. Under actual costing method, the total cost is calculated using actual cost of material, actual cost of labor, and actual overheads. While standard costing method, it uses expected cost of material, expected cost of labor, and expected overhead. And why do we use expected cost under standard costing? In order to find out the variance between expected and the actual cost that is recorded. What is normal costing? Under normal costing method, we use actual cost of material and actual cost of labor, but standard overhead charges. And we saw something called as activity based costing. This activity based costing, it is also called as ABC method of calculating cost. So wherein we have the approach of cost pool or identifying the cost centers. So what do? We identify all the activities that is involved in manufacturing the product, and then we will assign cost. Why do we do this? We will have to find out the cost involved in every activity, and that's why we use this method of costing. Then we saw something called as life cycle costing. So life cycle costing is wherein you're going to find out the cost involved in manufacturing the product right from planning till using the product, or from the date of acquisition till the date of disposal. If you're going to calculate the cost of the product, then it is life cycle costing. So now let's move on to the other types of costing. Joint costing and byproduct costing. It's very important concept that we will have to know. So what is joint costing? In some manufacturing concerns, what happens is they produce two products at the same time. Okay, so there are some final products that are jointly manufactured. So what happens when two or more final products are produced at the same time, cost being allocated to the two final products. Okay, such type of costing is called as joint costing. Say for example, petrol and paraffin. In a oil refining process, this petrol and paraffin are joint products that are produced at the same time, and they have the similar sales value, and hence what happens is the cost allocated to petrol and the cost allocated to paraffin would be based on the manufacturing process that is similarly done. So any total cost in manufacturing the products would be equally allocated between petrol and paraffin. So such type of costing is called as joint costing. So joint costing is generally happens when two products are manufactured using similar process at the same time by the manufacturing concern. So what happens? The total cost will be apportioned between the two final products. Example, petrol, paraffin. A different scenario is byproduct costing. A byproduct costing is wherein a byproduct means it's secondary product. Okay, so when a manufacturing concern focuses on manufacturing a main product, sometimes incidentally it will result in a byproduct. It will result in a production of a secondary product. So this secondary product, they have lower value when compared to that of the main product. So in such cases, what happens? Even there would be bifurcation of the cost that is involved in the byproduct and the main product, and such costing method is called as byproduct costing. Okay, example is a timber industry. So we had a timber industry wherein say for example, in a timber industry, when you actually focus on the timber, the byproducts that is manufactured, the byproduct that incidentally comes are the sawdust or the bark. Okay, so the principal product would be timber, but the byproducts are bark and the sawdust. This has relatively low sales value when compared to that of timber. But even then, what happens? You will have to bifurcate the cost between the secondary product and the main product, which is the timber. So this is an example for byproduct costing. So joint costing is wherein you will have to follow the same process wherein two different products are produced at the same time and both the products have similar sales value. While byproduct costing is wherein when you focus on producing the main product, incidentally you will get the secondary product, and this secondary product is called as byproduct because the sales value of the secondary product will not be the same that of a main product. Main product will have a higher sales value than the secondary product, but even here the cost bifurcation have to be done, but the cost bifurcation would be lower when compared to that of the main product. So the next two methods are the job order versus process costing. So what is job order costing? Job order costing is a method to determine the cost of a manufacturing product. So it is again a method that is used, and this method is generally adopted when the manufacturer produces variety of goods. So when a manufacturer produces variety of goods, he determines to determine the profitability of each and every job. He takes this method of job order costing. Okay, how it is done? Say for example, you have an fast movable consumer products company, okay, FMCG it's basically called. They manufacture soaps, they manufacture shampoos, conditioners, etc., even face creams, powders. So there would be a single company that involves in producing soap, that involves in producing conditioner, talcum powder, okay, and cosmetic items and whatnot. So what happens is under job order costing, each and every job is considered. Okay, so the first job is what? The first job is soap manufacturing. The second job would be conditioner manufacturing. The third job would be shampoo manufacturing. And the fourth job would be talcum powder. So for each and every product, if you're going to find out the cost separately, then such costing method is called as job order costing. And why do we actually find out this is because in order to know the profitability of each and every job that is involved by the organization. The last method of costing is process costing. Process costing is used when an organization is involved in mass production of similar products. So this method is of practical approach and it is very easy to understand and flexible to implement. And example for adopting process costing method, it is generally adopted in industries like oil, refining, food production, or chemical processing companies. So what happens in this company, the cost involved in production, okay, the cost involved in production is assumed to be same for all the products because the company is involved in production of only one product and in larger quantum. So the total cost that is involved in the production process, it is assumed to be same, okay, for all the products. So that's process costing for you. So with this, we have come to the end of this session. So what did we discuss in this session is that we studied the meaning of the word cost. So cost is nothing but it is an amount, total amount that is spent by the organization for producing goods or services. And there are two types of cost. One is direct and the other one is indirect cost. So direct cost includes material and labor. Indirect cost is also called as overheads, and it includes factory expenses, administrative expenses, office expenses, etc. And we just studied various methods of costing that is available. What is methods of costing? So it is a method that is used to calculate the total cost. Okay, so there are various methods to calculate total cost. So the first two costing are absorption costing and variable costing. So absorption is like full costing method. It is approved by GAAP and it uses direct material, direct labor, fixed overhead, variable overhead to calculate total cost. Under variable costing, direct material, direct labor, we will use variable overhead, but we will ignore fixed overhead under variable costing. And we just saw something called as actual costing method, standard costing method, normal costing method. Actual costing, it takes into account actual cost of material, actual cost of labor, and actual overhead cost. Standard costing, it takes into account expected cost of material, expected cost of labor, and expected cost of overhead. Why do we use standard costing method? In order to find out the variance between the expected cost versus actual cost. And we just saw something called as normal costing method. And we had this activity based costing, which uses the approaches of cost driver, cost pools, cost center, and we will identify the activity, then we will assign cost to it. Life cycle costing, it consists of costing, cost of acquisition, operational cost, and cost of acquisition, operational cost, and cost of disposal are included under life cycle costing. We just saw joint costing and byproduct costing. So joint costing is wherein you will have an example of petrol and paraffin. These products are jointly produced, and hence the cost have to be bifurcated between both petrol and paraffin equally, because both have the same sales value. Byproduct costing is wherein when you focus on producing the main product, when you get an ancillary or when you get an secondary product, it is called as byproduct. Example for this is the timber is a main product in the timber industry, but the sawdust and the bark you will get as a secondary product, which has a lesser sales value. So even here the cost have to be bifurcated between the main product and the secondary product. And finally you have the costing method called as job order costing and process costing. So job order costing, you will have to identify the various jobs that is performed by an organization, and you will have to calculate the production cost under each job. Okay. And process costing is wherein process costing, it involves costing method that is generally used by an organization which is involved in mass production, and when they involve in similar goods production, say for example oil refining company, or it could be a chemical processing company. So what happens, it is very simple to understand. The total cost involved, it is assumed to be same for all the products. So with this, we are completing Unit 3 of Financial Analytics and Control. Thank you.